Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The imminent deal Trump talked up on Saturday seems to have faded, mainly because of Israeli attacks on Beirut that have undermined the situation. But if there was to be a deal, it is sure to dominate financial markets. In the meantime, war is the standard situation. These same markets are also contending with the implications of the wildly successful SpaceX float. It was full of animal spirits, FOMO and gambling fever, and more than a few observers are seeing this as evidence of a gigantic bubble. After all, it values SpaceX at 100 times its current revenues, and the business operates at a loss. At a $2 trillion valuable, to be sustainable, it would need to generate after-tax profits of at least 10% or $200 billion per year. And that is double what Aramco-plus-Google do now, number one and number two combined. In the real world, Thursday will bring the next US Fed policy meeting result, the first chaired by Kevin Warsh, Trump's replacement of Jerome Powell. Powell will still have a vote, however. Most observers see them holding their key rate at 3.75%. The Fed has an inflation target of 2% for the PCE measure of inflation, which is currently running at 3.8%, with the CPI running at 4.2%, a three-year high, and both rising sharply last time they were released. There will need to be some policy gymnastics to ignore these signals, but they may hope the fuel component reverses soon to save them. That is probably why markets think there'll be no change on Thursday. The US Fed won't be the only central bank in action this week. We'll get reviews from the Bank of Japan, where a 25 basis point hike to 1% is expected, Sweden's Riksbank, Norway's Norges Bank, the Swiss National Bank, the English Central Bank, and even Brazil. More importantly for us is we'll get the RBA's latest update on Tuesday, where no change from the current 4.35% is expected. And the New Zealand first quarter 2026 GDP result will drop this week, and it'll be a surprise if it isn't a year-on-year growth rate of 1.1%. Of course, this will be very dated data. In fact, the RBNZ's own now forecast suggests GDP will drop 0.2% in the second quarter of 2026 from the prior quarter, after rising 0.6% in the March quarter. Markets see a March quarter rise of 0.9%. In Japan, attention will focus on the Bank of Japan's policy meeting, where it is widely expected to raise its benchmark interest rate by 25 basis points to 1% amid persistent inflation and yen weakness. If delivered, it would mark the first rate increase since December last year and the highest policy rate since 1995. The country is also set to publish trade, inflation and machinery orders data. In India, producer inflation is projected to rise to 9.1% in May from 8.3% in April, driven by rising energy costs. Other major releases there include trade, unemployment, and passenger vehicle sales. In China, investors will monitor a key series of economic releases this week, including house prices, industrial production, retail sales, fixed asset investment, and their jobless data. After April's surprise decline, China's May new yuan loans data resumed their growth over the weekend, up 5.5% from a year ago, with a modest 520 billion yuan rise, about what was expected. Still at that level, it's the weakest May increase in 18 years. As the usual suspect, the property market continues to drag on bank lending. Across the Pacific, American consumers felt the cost of living pressure ease slightly in June as petrol prices came off their recent war highs. The University of Michigan's Consumer Sentiment Index rose in June, up from May's all-time low, and a better-than-expected recovery. It was a modest recovery all the same, with improvements seen across all age, education and political groups. Lower-income consumers, for whom fuel represents a larger share of budgets, showed a particularly strong rebound, even if it is still deeply negative and its second lowest of all time. In Europe, Switzerland had another set of national referendums. One proposal, to cap its population at 10 million, has been voted down. The US Treasury 10-year yield is now just on 4.49%, up 1 basis point from Saturday, down 5 basis points for the week. And the price of gold has recovered a very minor $4 from Saturday at $4,222 an ounce, but down $102 for the week. Silver's little changed at $67.50 an ounce, and the same as last week at this time. And oil prices are up 50 cents from Saturday at just under $85 a barrel in the US, while international Brent price is just over $87.50 a barrel. A week ago, these two prices were $90.50 and $93 respectively. Hormuz transits have dried up again, and the global oil reserves are draining into uncharted territory. And the Kiwi dollar is down 10 basis points from this time Saturday, now at 58.3 US cents, up 30 basis points for the week. Against the Aussie were unchanged at 82.8 Australian cents. Against the euro were holding at 50.4 euro cents. That all means our trade-weighted index starts today at just under 62, which is unchanged from Saturday and up 30 basis points for the week. And the Bitcoin price starts today at $63,655 and down a minus 0.3% from Saturday. That's up 5.8% for the week though. Volatility over the past 24 hours has been low, at just on plus or minus 0.8%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.